Part 8 of our overview on current liabilities, we're going to discuss briefly income tax payable. Income tax payable overview. This lecture is just an overview, as we will have a video specifically on accounting for income taxes and income taxes payable later on. Let's assume you work for a company with a December 31st year end. So depending on the structure of your company, whether you're a C corporation, an S corp, a partnership, an LLC, a Schedule C, your year end will be different and your tax deadline will be different. But you will always have a time period to complete your taxes and send them in to the government from your year end, in this case December 31st, to March 15th, 2021, which is, for our example, that will be our filing deadline. So we've got that 2.5 months to complete our tax return and get it into the government. So even though you may not have completed or filed the tax return, technically any amount you owe the government at year end, December 31st, 2020, should be reflected as a payable as of December 31st, 2020. So since there is a short time period between your year end of 12/31/2020 and your filing date of March 15th, 2021, any amount due to the government would be considered a current liability and recorded in the income tax payable account. So let's say it's February 1st, 2021, and you have calculated that you will owe the government $1,000 for your tax return, but you don't have to file until March 15th, 2021, and so you're actually not going to file until March 15th, 2021. Why should the government get your money any earlier than it needs to, right? So you'll write that check for March 15th. And have that $1,000 that you know is payable to the government. But here's the thing. You're going to record that liability as of December 31st, 2020. So let me repeat that. You'll record this liability as December 31st, 2020, even though it's February 1st, 2021. This is a typical example of what an accrual is. When you're doing financial statements, you always have to determine what liabilities existed at the financial date of, in this case, it's December 31st. So you'll want to make sure that it's booked for December 31st. You may not have known what the amount due was until February 1st, but that was a liability at year end and it should be reflected in your 2020 year. So here's what the entry would look like. 12/31/2020, income tax expense debit for $1,000, credit income tax payable, that liability for $1,000. So that expense will go to your income statement and be a reduction of your net income, and that income tax payable will be a liability that will be on there until you pay that check on March 15th. So just in case you were wondering, if the government owed your company money instead, you would record that as a current assets and to the income tax receivable account. But in this particular example, you owe the money, so it's income tax payable. Now, that's our quick overview on income tax payable. This was just an overview. When we get into the video of accounting for income taxes, we'll discuss such cool topics like deferred tax liabilities, deferred tax assets, loss carrybacks, and loss carry forwards. So I hope that helped you understand a little bit about income tax payable. Well, I hope you liked that video, and please comment down below if there's another topic on auditing or accounting you'd like to hear me lecture on, and please remember to subscribe. Well, that's it for today. This is Professor Hungerford. You have a great one.